Hey everybody, it's me, Gregory Mannarino. How are you today? It is Wednesday, November 8th, 2017. People, right now as I am doing this video blog, there's a set of dynamics in this market that is changing very rapidly, and we need to pay attention to this. Now, I scream from rooftops pretty much every day talking about the bond market and how important it is to watch. It'll let us know what's going to happen in the stock market. What's going on right now, and as of yet, it's really not getting much, although it is getting a little attention from the mainstream financial channels. As a matter of fact, Rick Santelli from CNBC was just talking about the bond market. He's not happy about what he is seeing here. He's a very smart guy. Let's talk about the bond market and how it's affecting the financials and how it's weighing on the market right now. A couple other things are going on as well. So, look, we understand that now for the better part of a decade, nearly a decade, the Federal Reserve has been artificially suppressing interest rates, not allowing the market to determine fair value for debt. I talked about the London gold fix yesterday, and how the banks are not allowing the price of gold to be dictated by the market. They're fixing it. So you got the debt market that's being rigged. You got the gold market that's being rigged. Anyone who doesn't believe that the stock market is rigged is also, way out there and way off track. But this bond market is tremendous. It's the biggest market of them all, the debt market. Okay. This is something else I've been talking about for like years, especially over the past maybe 6 months or so, that yield curve. The yield curve keeps flattening out. And although the mainstream financial channels are going to try to tell you this is not important, if you look back on history, every single time that the yield curve has flattened out like it is now, it's been a major warning sign of something not too far off. Now, the flattening yield curve is not good for the banks. Why is it not good for the banks? Well, the banks obviously make cash by loaning out more cash, okay? They create it out of thin air and they lend it out. Okay, good. So if the long end of the yield curve is coming down and yields are dropping, banks can't make money. So you can see how that's weighing on the financial sector right now, which is getting hit pretty hard. And these dynamics here, again, the flattening yield curve, the fact that banks are going to struggle in this environment is not a good sign moving forward for our economy, for the stock market. And look, we all understand that, you should understand that these distortions that exist in this market are two extremes. I have put this into a perspective. You have bubbles to the upside, you have inverse bubbles, and a big hole in the middle that's going to fill at one particular time. Now, the Federal Reserve is in a lot of trouble here. We understand that the Fed is saying that they're going to normalize their balance sheet. Well, the Fed apparently started that already. It's not affecting the bond market in any positive way. That yield curve keeps flattening out. And if the Fed decides to raise rates next month, which I still think they're going to try to remain credible, that's going to affect the short end of the curve, more so than the long end, obviously, and that will nudge the yield curve to be even flatter. You got it? So they're in a bad spot. The Fed never had a plan for this. All they knew to do last time when this whole market melted down in 2008 was to just buy everything and, with no exit plan. And now the chickens are coming home to roost here and the banks are starting to suffer. See, what we're watching here, people, I think you get it already, is the free market. The market is finally doing its job. It's saying, no, we're going to correct these distortions. And that's what's going to happen here with regard to the bond market, eventually with precious metals when this London gold fix, which is a crime. I can't believe that they actually openly admit, I went over this yesterday in the video I did yesterday, watch it. These banks openly admit that they're fixing the price of gold. They're fixing it. like it's broken. It's incredible. It's really incredible. So right now, we see some cash moving back into the bond market. Now, I know you're watching this in real time on my website, traderschoice.net. It's right there. Everything you need to watch this market, all the important things, are right on my website, traderschoice.net. There's a link in the description of this video. You can watch the bond market in real time, gold and silver in real time, the derivatives of gold and silver in real time. You can watch Bitcoin in real time. And I also set up a nice technical chart for you. Play with it. Learn how to use it so you as well can capitalize on this market, because there's opportunity everywhere as usual. This market is going to correct. When? Don't know, don't care. I just want you and me to capitalize on it. That's it. That's what I'm doing. So, again, here's the dynamics going on. Flattening yield curve is hurting the banks, hurting the financial sector today, putting pressure on the stock market. We'll see how that goes. I mean, this could bleed off to a whole bunch of other things as well. You got cash going back into the bond market. You got cash going into the derivatives of gold and silver. Gold and silver are higher today. So we're going to need to see how this plays out through the rest of the week. Now, again, we know this is not real. On Saturday, I had said this market was going to go higher this week. We were going to see cash come out of bonds. Well, that's how this week started out. It's changing now. These dynamics are changing. This market, if you have to understand, it's not static. It's extremely liquid. So it's going to change on a dime, and that's why you got to stay on top of this. It's so important. At least from a trading standpoint, you have to be willing to say, okay, this is changing. I gotta look at a new strategy. That's the way it is. So I'm not sure where this market's going to end the week at this point. Could end lower. I don't know. We'll have a better picture tomorrow, I think. We'll be able to see, or maybe even at the end of today. We have to watch that bond market. I cannot stress this enough. Forget the stock market, people. The bond market is where you want to be looking here. Everyone's looking here. You got to look over here. And the bond market is sending us a very ominous warning right now. We have got to pay attention to this, because nothing in this environment is real. It's all been faked, continues to be faked, and the Fed is in a bad spot, along with the other world central banks as well. And I'll tell you something else just real quick that I hinted on yesterday. These companies that are reporting earnings that seem to be so spectacular, there's something else going on under that. I think someone should start looking into their books and their accounting practices, because, mark my words, they are faking their numbers. Anyway, with that said, I'm going to see you at the end of the day. We'll recap some of this. Watch that bond market. I'll talk about it later. But right now, today, I think we're getting a bad sign from this market that something may be unfolding just right now. Could get progressively worse, but no matter what happens, you and me, we're going to capitalize on it. I'll see you later at the end of the day.